A look at futures on this final trading day of the month of December. Of course, Q4 in the year. Markets are going to be closed tomorrow, but Dow is up 98, NASDAQ up 82, S&P is up 18 and change. So far for the month anyway, we actually have a very decent story. If you look at the NASDAQ, up 1.4%. Some losses on the Dow and the S&P, but for the quarter, let's give you these percentages. As you can see, across the board, good news. S&P up 2.5%, NASDAQ up more than 7% for the quarter. And then across the board for the year, take a look at the performances of these markets. The Dow gaining almost 13%. We'll see how today goes. S&P 500 is up 23, almost 24% for the year. And the NASDAQ is up almost 30% for the year. I want to bring in Andersen Capital Management Chief Investment Officer Peter Andersen. Peter, let's talk about what your outlook is going into 2025, because, you know, the Wall Street Journal writes this morning about stocks on pace for the best 2 years and a quarter of a century. But they do point out that many investors don't believe that that's going to continue into 2025, at least not at this heated pace with these double-digit returns.
Very difficult, I think, to achieve a consecutive 3-year 20+% returns. In fact, I think in the past 40 years, it's only happened once, Cheryl. So, you know, when you look at history, the odds are against us. But this time, dare I say, it might be different because we have a new administration that is extremely capital markets friendly. So we have that going for us. However, on the other hand, we have the fear of higher interest rates with profound growth. So that's what we'll be looking at is, as we first enter the quarter next year, how is President Trump going to handle this? And we also know in our favor that he is a great proponent of the capital markets and actually, I think, interprets the returns of the capital markets as direct feedback on his performance.
That's an interesting take. Okay, Greg Fresnella, jump into this. What about you? What about your outlook for 2025? How are you feeling about the markets?
So good morning, Peter. Hey, look, I mean, I'm feeling pretty good about the markets heading into 2025. I think the backdrop is very, very constructive. The interest rate story is a definite concern right now. Yeah. And, you know, I think it's interesting because, and I'd love to get Peter's take on this as well. You know, we've had the Fed lower rates by 100 basis points. We were on board with that recalibration. Yet we've seen rates move higher on the long end by 100 basis points since the Fed started easing. So it's impacting the mortgage market. It's impacting markets across the board. And I think the question here and the question for Peter is, what do you think about the rate outlook going forward here with the Fed lowering rates and at the same time rates are going higher?
Does seem very counterintuitive, but in fact, I'm thankful that that's happening because I think we're almost at what economists call a neutral rate anyway. And I was totally surprised that the Fed lowered rates at this last meeting. I think he doesn't have to take any action until a wait and see how the markets react to the President Trump's new policies. You know, we've spent so much time focusing and fretting about interest rates, and think back to 2022 when the market really got destroyed because the Fed took that big the series of hikes. So I'm praying that those don't happen again. Even though, let me just add this though, even if he did raise rates, I think there are plenty of stocks out there that are very resilient in the face of rising rates, but many investors don't make that connection. They just see the rising rates and they run for the hills because they're afraid of the present value of their stocks.
You know, it's interesting because there's an op-ed in the Wall Street Journal this morning by Alan Blinder, Will Trump respect the Fed's independence? And it talks about the relationship with the incoming president and, of course, Jerome Powell. And it says, the March 19th meeting in particular, if there's another cut or not, would the Fed and Jerome Powell face the wrath of Donald Trump because the markets are looking for these cuts? Is that something that you are kind of looking at in your crystal ball as far as how this relationship's going to work between the two men?
Yes. we look at everything, especially, with President Trump. There's a whole new set of things to look at, and you highlighted one of them. I mean, I was joking the other day that I could actually see President Trump putting in a new Fed authority that, in the face of rising inflation, still wouldn't raise rates. Just think of what that would do to the economists out there trying to figure out this calculus. But I think nothing is off the table with him, and I welcome that, because in the past, we've given the Fed a lot of credit into saving the economy, et cetera, and I'm a little bit cynical about that. For instance, what would have happened? Of course, we can't go back in time, but what if the Fed actually did nothing during the recovery from COVID? Maybe the markets would just recover themselves, supply and demand would recover on its own, and the Fed wouldn't have had to do anything. But that's a whole thought experiment that we really can't actually live out, can we?
Peter Andersen. Peter, thank you for being here, and Happy New Year, sir.
Back to all of you there.
All right.